Welcome to Money Talks, the ultimate financial news upload, where knowledge meets in Parliament join the money getter duo, CC and Cecil B, as we unravel the mysteries of finance Monday through Friday at 8 p.m. From the latest in fintech, cryptocurrencies, real estate, electric vehicles, IPOs, and Wall Street, to the rise of robotics and AI, we cover it all. So tune in as we share in the spotlight on how Black entertainers and creators alike are shaping finance and tackling IPOs, giving you the information you need to thrive in today's economy. This is Money Talk. Good evening. Today is Monday, October 7th, and welcome to Money Talks. I'm your host, Cecil B. Money Getter. And first up in Investment Bulletin news, research shows that Black Americans are leading the surge in new stock investors, fueled by the power of social media, cutting-edge mobile apps, and open dialogues about money. The stock market is evolving into a more diverse landscape. And over the past few years, terms like personal finance and financial literacy have become buzzwords on social media. In addition to generating likes and views, these topics have made an impact beyond the virtual sphere. Recently, studies found that Black investors, especially young Black Americans, are the fastest growing group of stock buyers. The Wall Street Journal reported that in 2022, almost 40% of Black Americans own stock, up from about a third in 2016, per Federal Reserve data. Similarly, a survey by Ariel Investments and Charles Schwab revealed that the growth is led by young investors under 40. Approximately 70% of the survey's Black participants under 40 were investing compared to 60% of their white counterparts in that same age group. You're seeing topics of money and investing coming up at the dinner table slightly more among Black families than it had ever before, Ariel Patrick, Ariel Investments Chief Communications Officer, said, per WSJ. Also fueled by mobile apps, commission-free trading, participation in 401ks, crypto, meme stocks, and social media experts noted young Black investors increased access to financial tools and information. Despite the notable amount of Black stock buyers, the Federal Reserve's 2022 survey of consumer finances data suggests that the amount of money put into stocks is still small, as previously reported by the GRIO. The median wealth for Black families increased by 60% between 2019 and 2022. Yet Black families' median wealth is still $240,100 less than the median wealth of white families. Though Black people may not be putting as much money into their stocks, the group's desire to buy stocks and make good investments continues to grow thanks to social media, according to the FANRA Investor Educational Foundation. When looking to learn more about stocks and financial investments, the study found that 3/4 of Black people turn to family, friends, and colleagues. However, the majority tend to lean on social media groups or message boards for investment knowledge. Meanwhile, most white investors rely on family and friends for investment information. Get in the comments and let me know what you think and how you feel. Up next in Buzz Talk, make your money work. Here's how to score $500 a month from Pepsi Cola as Q3 earnings approach. PepsiCo Inc. will release earnings results for its third quarter before the opening bell on Tuesday, October 8th. Analysts expect the purchased New York-based company to report quarterly earnings at $2.29 per share, up from $2.25 per share the year ago period. PepsiCo is projected to report revenue of $23.82 billion, up from $23.45 billion according to data from Benzinga Pro. Some investors may be eyeing potential gains from PepsiCo's dividends. The company currently offers an annual dividend yield of 3.23%. That's a quarterly dividend of about $1.35 per share. So, how can investors exploit its dividend yield to pocket a regular $500 monthly? To earn $500 a month or $6,000 annually from dividends alone, you would need an investment of approximately $185,943 or around 1,100 shares. For a more modest $100 per month or $1,200 per year, you would need $37,121 or around 221 shares. Note that the dividend yield can change on a rolling basis as the dividend payment and the stock price both fluctuate over time. The dividend yield is computed by dividing the annual dividend amount by the stock's current price. For example, if a stock pays an annual dividend of $2 and is currently priced at $50, the dividend yield will be 4%. However, if the stock price increases to $60, the dividend yield drops to 3.33%. Conversely, if the stock price falls to $40, the dividend yield rises to 5%. Similarly, changes in the dividend payment can impact the yield. If a company increases its dividend, the yield will also increase, provided the stock price stays the same. Conversely, if the dividend payment decreases, so will the yield. Get in the comments and let me know what you think and how you feel. And up next in Tech Talk, unleash your financial potential. 3 dividend growth stocks that will take your portfolio to new heights. For dividend-paying companies, maintaining dividend growth is an essential way to demonstrate to investors that a firm is stable and enjoys long-term profitability. Dividend growth is also attractive to investors because it means an increasing passive income stream through stock ownership. Some investors also subscribe to the belief that dividend growth is an important factor in determining a company's stock price, as in the case of dividend discount model. Investors seeking to capitalize on dividend growth might seek out a targeted ETF like ProShares S&P 500 Dividend Aristocrats ETF, which tracks S&P constituents that have steadily increased dividend payouts for the last 25 years. Significant dividend growth and science are being undervalued. The Signal Group is a health services and insurance business that currently has an annualized dividend payout of $5.60. Though its dividend yield is just 1.65%, considered below ideal by many dividend investors. Its dividend growth rate is sky high. The company enjoys an annualized 3-year dividend growth rate of nearly 400%. Beyond this significant dividend growth, CI presents a sustainable dividend payout ratio of just under 46%, meaning that its earnings comfortably cover its dividend payouts. Analysts widely see Cigna shares as undervalued, as the company's stock has upside potential of almost 16%. Based on consensus price estimates, Cigna also offers stability found only among blue chip stocks, as it has its origins in insurance companies dating back 200 years. Solid dividend gains alongside earnings history. CDW Corp is an IT service company that most recently paid a quarterly dividend of 62 cents in August, about double the payout from the same time 5 years ago and 10 times the payout from a decade ago. The firm has a strong history of dividend increases and an attractive dividend payout ratio of 30%, which could reassure investors that the company is managing its dividend payments effectively and sustainably. Supporting the growth of CDW's dividend payments is its strong earnings history, and analysts expect that to continue based on a projected earnings growth rate of 9%. The company did recently report a decline in revenues amid a challenging period for the IT industry more broadly, but at the same time, it has improved its gross margin to maximize its revenue potential as the industry-wide headwinds ease. Get in the comments and let me know what you think and how you feel.
On our Information Meets Execution YouTube channel, you can also check out the 734 Listening Library YouTube channel for self-help shorts and audiobooks. Follow us on Instagram at 734.